Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of gold. My name is Vic. Thanks for joining me in this analysis. Before we jump into the gold, what you need to understand what dollar has been doing, because a dollar kind of influences almost everything in the financial market. I know there are so many opinions about dollar's weakness and bullishness and bearishness, all sorts of opinions are there in the market, but so far there is no replacement for dollar. So whatever you're trying to do in financial markets, that is still dependent on dollar, and that is why we must look at the dollar first. If you haven't actually seen my analysis for a DXY dollar index, go and check it out first before you start looking into gold, because in that analysis I've covered most of the aspects. I provided the update, and if you're new here, then I strongly suggest you to check out my DXY analysis from the previous week, which is the last week of October. I'll put a link of that in this video's description as well. So in the dollar, I'm not going to actually repeat the entire thing, but the dollar, we were expecting market to fall from this FCP zone into this FCP zone, which is the intermediate one. And this is where the things get interesting, because if this FCP zone is broken, then market is expected to fall to 92.89. And if this FCP zone holds, then the dollar is expected to rise to 95 or even towards 96 level. So what does it tell us in terms of gold? Now gold at the moment, for last few days or so, it has not been that correlated with DXY with dollar because of several factors in there. There has been a different pattern on gold, and in my previous week's analysis I mentioned that the gold bulls were coming. We'll look at that, and the reason behind that was because the DXY was supposed to fall. That means gold and other currency pairs such as Euro USD was supposed to go up. So although for a couple of days they have not been linked together, but most of the time they will be, because gold is measured as XAUUSD. That means XAU gold is being measured against USD. USD is dollar, right? So there has to be a link between them. If you are looking at a different variation of gold, such as gold in terms of pound or gold in terms of Australian dollar or something like that, then it may be a little different, because that's where the currency conversion will come in. But indirectly or directly, ultimately it will still fall on it will come back to the analysis of dollar again. So if the dollar right now is at decision level, that means the gold is also probably at a decision level. So let's switch this off and look at our gold setup, right? So right now we are here, and if you haven't actually seen my in-depth analysis of gold, I actually covered gold in complete in-depth, the complete scenarios and what are the prospects, long-term, short-term, higher time frames. Everything is available in the previous week's video. Go and check it out. There is a lot of educational material in there as well, so it is definitely worth watching that one. And if you want, you can watch previous weeks, you can keep on going backwards in time to watch other analysis as well. That should give you a very good idea what I'm going to just talk about. So in here, what we can see, that market has started to move upwards on the opening of October, and we were expecting that because it is hitting the mid of the Bollinger Band on weekly time frame. And we also found that there was an M pattern. So while talking to one of my students, I was able to plan this trade in advance, near about 2 days in advance, and we were able to take long position from here. And now the market actually reached our profit target level, so I was able to take long from here, and then I was able to take a little bit of short trade as well for a day trade. And the reason behind that is very simple. We see an M pattern, which is FCP pattern, Fibonacci Confluence pattern, and that is why, and which was completing around here. And there are a few other factors which could push the price back upwards. So everything lines up automatically. You see, if I go back to DXY was supposed to fall. If you see my previous week's analysis, and gold was supposed to go up exactly at the same time, so they are kind of like inversely correlated, and that's what the beauty is of this sort of analysis. Now if I go to the 4-hour time frame, what I see that market is creating a W structure. So this is the point where we were able to take a nice short position coming right into this level, and then market created kind of like, you know, divergence based double top scenario here, and that is why the market is falling again. So if the gold goes below this 1891, then we have very strong bearish movement coming in. And now just look at this previous structure that you have. So far the market has been creating lower lows here, so the market is kind of like, you know, going down at the moment, and this is kind of a pullback into this previous structure area. If you just imagine that this is a box, then the market has come back to retest that. So that retest was necessary. It's kind of like a healthy pullback. So if the market wants to go upwards, then it will have to go through a lot of factors around here before it can turn into a bullish case. For now there are more bearish case for gold because it is right there in that structure level, and it has created a W pattern as well. So let's bring in our original analysis, and this is what we observed. This is the M pattern that we saw, and that is why we were expecting gold to continue into this FCP zone that we identified nearly a week ago. And I was able to take personally one short position for day trade, another here, and the second one here, and I did not take this one because we were into the Friday and I did not want to keep a position open over the weekend. Now market came very close to 1917 level, which was like an intermediate level that we found out last week. There is a still possibility that market may try to go near about to 1925 to 1927 level. So this is also an FCP zone, but for now for now that looks like a little lower probability, because unless this market starts to move upwards and it breaks through this 1917, then only, like, you know, it will be a possibility. Otherwise it is still struggling in this FCP zone. So my trading plan will be, I'm looking for short, because higher time frame is also telling me that I'm looking for short. But if the market gives me good long opportunity to from this FCP zone into this level, then I will take that. But around this level again, I will look for short opportunities once again. However, my bias is short from higher time frame because of several reasons which I discussed in previous week's video. You can check it out. If the market starts to go down, further down, and it breaks through this 1889 level, then I'm looking for somewhere around this intermediate level as well. So I'll be looking for something like this. Let's measure using Fibonacci to see if there is anything around that level. Yes, that's exactly at 61.8. So I will also be looking for this level where the price can come to. Right, so my trading plan is very simple now. Okay, if the market starts to fall and if it violates this level of near about this 1890, then I'm looking for 1877. That can be a day trade short opportunity, and once that has been broken, then obviously I'll be looking for 1862, then 1846, and you can see all of these levels which are still important, but they may require a little bit of revision at later point in time. On the bullish side, I will be looking for long opportunity. If the market gives me that opportunity, then I'll be looking for somewhere around 1925, 1927, 1929, that sort of area here, FCP zone, which is right there. And after that I will have to reanalyze, because by that time there will be a new structure in the market, so we'll have to reanalyze and see where it could go to. But this is the trading plan that I've got on gold. So hopefully this was useful to you and educational to you as well, and if you found this interesting, then hit the like button and share with other traders and trading communities. Put in a comment, and do not forget to subscribe to my channel as well. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.